The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome. Andrew Peters here from DIY Forex Skills with our next webinar on developing profitable Forex strategies. It's going to be my third attempt for recording this week's webinar. First time on live, I forgot to press record. Second time in recording, I forgot to share screen. And hopefully this one will do the trick. So let's move on. I've just on this page also indicated my Facebook address, which you may want to look at sometime. That's it here, and I do a daily posting on various ways of trading. One of the strategies I've talked about is the Aussie dollar strategy. I'm also now looking at the Canadian, US dollar Canadian strategy. Trading the Aussie dollar over the last month has yielded me on some 30% profit. So it was a good trade to be in. It's now reached a particular strong resistance line, so I'm easing up a little bit. In any case, you can follow me on Facebook if you would like. And obviously I'm not in the right place, so let me get to the start. And that also shows you my DIY Forex Skills, my main educational website. It's that one there, the white underneath the blue banner. Now let's try again. So a risk warning and disclaimer. If you need to read this, please pause the video to do so. And the advice always is to trade responsibly. Don't trade your life savings. Trade small amounts and trade with money that you could afford to do without if it really came to the crunch. And then be one of the happy traders who enjoys trading. Now, the concept that we run in this webinar series is straightforward. We take a trading strategy, we understand the logic of it. And as I've said before, those two aspects you will find on many webinars that you might attend and in many textbooks and many PDFs that you might download from the web. So there's nothing special about that, and I don't claim any special advantage in that respect. What I do claim advantage on is that we can now take these ideas for strategies that exist and that we all know about, but we can put them to the test using the FX Order Trader Elite, which is the product that I developed and that I think is well worthwhile having as part of your toolkit for Forex trading. It allows us to backtest strategies that we might read about, allows us to optimize them, and in the end we can also trade with them, so that if we find that a particular strategy works best in a session in New York or London when we're normally asleep, but we'd like to trade that session, that particular strategy, then having set that strategy into the order trader, it will do the trading for us. So two uses of the order trader. One is to learn and to test ideas, and the second is to trade without you having to be involved or without you having to be at the computer. I think we should always be involved with any robots that we run, but we don't need to be at the computer all the time. So what have we done so far? We've looked at a number of ways of entering trades, and the first one was on a trend confirmation or a trend continuation type strategy, where we relied on a moving average crossover, 50 and 100, and a MACD as a confirmation signal for that strategy or for that entry, and that worked quite well as we saw. We also then did a pullback, so instead of entering at the start of a trade or close to the start of a trade, we waited till the trend was in motion, and then the inevitable pullback will occur, and we used the RSI period 3 as our signal as to when that pullback had completed, and if the main trend was then still in place in terms of the moving averages, we would enter the trade at that point. And that too we could automate with the Auto Trader. So both of these we could do. We then looked at a trend line break, where instead of a straight line break that we might draw on the chart, we simulated that with a smooth moving average of period 10, using that as our trend line and taking the break of that. And then we looked at a bullish and bearish divergence, which I'll come to in a minute, and I left that a little bit confused as to how we might automate such a strategy. And that's what I want to start with today, to show you that. And just as a reminder, we also last week did a weekend gap trade, where price on Monday can sometimes open at quite different price to what it closed at on the Friday night. And that provides us, and since often such gaps are filled, we can then enter a trade which would follow that filling of that gap. But so now let's look at this divergence type trade, which is a trend reversal, and let's look at that on the chart. And that's not the one that I want, but this is the one that I want. Let's move the strategy tester off, and I've got a few too many lines on here, so let me just delete that to start off with. This was obviously from my previous attempts at recording. So the divergence is quite simple. When price continues to rise while an oscillator, in this case the RSI, continues to fall, we have what we call a bearish or a negative divergence. And if we were somewhere here, we would now say it's likely that price is going to go down soon. So if anything, we want to do a sell. And as we move forward, we can see, in fact, that that's what plays out. It doesn't always occur, but it's a very common phenomenon, and it's a signal that many traders follow. Now, drawing lines on a chart, so in manual trading is easy enough, so you could use that. And if you wanted to trade with a trend line break, you could also obviously add another trend line here, and then you could decide to enter your trade at this point here, having confirmed that you have a bearish divergence based on the oscillator. You've now broken the trend line, and so you could enter here. And obviously in this particular case, you would have a nice trade, and that one's showing 480 pips. Now, it doesn't always that nice, but that's the method we look at. But what I wanted to show us as to how we can automate this. And I think it's an interesting thing to look at, because this is a way of using moving averages. So I've got to find some ways in which I can tell the Auto Trader when this sort of situation has occurred. And to do that, we use moving averages, as we do for a lot of things. And we're going to use a moving average this time of 10. I'm going to use a smoothed, and we're going to set the shift at 0. I'm going to apply it to the close, and we'll color this one red. And now the trick is that we want at some point this time here, we want to tell the Auto Trader what price was back here. And if price was lower, then we know that price has been going in an uptrend. And the easiest way to do that is to add a second moving average, same period 10, smooth, close. We're going to make this arbitrarily our slower one. But see this thing here shift. Normally we have shift to 0, which is, in other words, it's at the bar that we're currently at. But in this case, after some optimization, I shifted that by 100, and our line is now being shifted. And so at this point now, roughly when we want to take a trade, in this case sell trade, we've got a nice moving average crossover with quite a wide one, about 250 pips. But you can see that price has, the red moving average has crossed the green moving average in upward direction. So we would normally take a buy with this, but because obviously we want to take a sell, I have a feature on the order trader which allows me to reverse the signal so that it would take a sell at this point. But what I wanted to show you was that this green line is the same as the red line, except that it's been shifted 100 points, 100 bars. And if I put my cursor on this tip here, you'll see if I take it back here, that's 100. And so this second line has been shifted forward 100 bars to give us a moving average crossover at the point in time when we want to take a trade somewhere in here. Just to finally convince you, if you're not yet convinced, if I made that, for instance, a shift of only 1, you'll see how that line is virtually mimics the moving average with shift of 0. And so that's the basis of, oops, I got the wrong one. So that's the way how we can specify that price is going up. And then we need to find a way to specify that price that the RSI, or the oscillator, is going down. Now we can, as I will do, just use RSI somewhere above my green line, which is a level 40. So if we have this condition met, say a crossover of at least a certain number of pips, as well as RSI now being somewhere in this region here, then we would ultimately take a sell. You can do this a bit more fancily by putting a moving average on RSI. And again, this is something useful to know. If you haven't yet done so, we drag the moving average from our navigator panel to our indicator window, let go. The first thing we do is we apply this not to the close, but to our first indicator's data. And from memory, the setting that works quite well is a smoothed. In this case, it's a 0 shift, and I'll make this the fast one, the OK. And here we have our red moving average of RSI. If I then go back to my navigator panel, I'm in the top left, take my moving average and drag it down here again, and again apply it to the first indicator's window. I found out by optimizing period 70 for a smooth. We'll make that the slow and make that green. Click OK. And now what we find is that you can see how the moving averages, because I have a faster one and a slower one, that obviously at some point when RSI has been higher, then the fast one is going to follow that more, and at some point it's going to cross down across the green one. So at this point here, this would trigger our sell trade, because RSI 50, moving average of RSI 15 is now crossed below the slow moving average of RSI. And as you can see, that's quite a good position. That would be about here. And we're nicely in the trade for that divergence or trend reversal trade. The only unfortunate, so I can do this in the order trader. The unfortunate thing is that when I do it, because of all the calculations required to calculate two moving averages, the strategy tester becomes very, very slow, and it would take many, many hours to do a back test with settings like that. So in the case that I'm going to show you, I'm not using these, but that's quite a nice one to use if you want it, if you are manually trading, or if you're satisfied that that works. It has no effect on your forward trading, so you could always enter those settings to guide you to your trades when you're actually trading live on demo or on a live account. Now let's see how we enter these settings into the order trader, and for that we go to our strategy tester up here, and we go to our settings and expert properties, and I need to load the reverse with RSI, and these are the settings that I've come to after some optimization, and I'm not going to show you how those were arrived at. But let me go down, because the crucial thing I'm trying to show in this webinar is how we use moving averages. And let me just get to this point here. And so we've got the moving average module. I've set the filter entry to true. The slope has to be true as well. We're not using the exit. I've got my crossover pips of 50. I'm trading on the 60-minute, the 1-hour time frame. The period is 10. It's smoothed and it's done on the open price. And I've got a period 10 for my second moving average, but this one is shifted by 100. And I don't know why I've got that open price. That should be closed as well. And then for my second, I'm also using a second moving average crossover, which I'm not demonstrating up there. Again, it's for the period is 60 minutes. So I just want this candle to have crossed as well as this main shifted MA crossover. So with those settings and then down to RSI entry, I found that period 40 turned out to be better, and it's the buy. It buys and therefore sells because I'm doing my reverse between 40 and 70, and for the seller set between 60 and 30. Let me just go back up the top here, and this is where I have our reverse entry setting. So the signals are telling me down below to buy, but of course at the top of the thing I want to actually sell. So I just set reverse entry to true. And now we can run it. And I've got the 1 hour, I've got my Euro USD. I'm going to run it from 1st of January to 2014 to 1st of July in 2015. So let's give it a go. Here we've started our trading. Now, while that's happening, we can take a look at this. What I surprised when I look at this particular example, I would have thought that the optimum time would be to enter somewhere here, by which case the crossover is up at 230 pips. And RSI has come down a bit. But when I did my optimization and my back test, I found surprisingly that the best setting was when the crossover was about 50 pips, which turned up on this particular example somewhere around here. Now, as you can see, turns out to be there has been a bit of a, of course, we've already had a slope up. We've had a slope up, if you like, from here to here as well. So with this particular one, it's taking me at this position here, and we're entering a sell trade, which, as you can see, does play out nicely. Now, in the meantime, we have tested the settings that I've shown you, and in an 18-month period, starting with a $10,000 account, it's made $4,400 in profit, so it's a 40% profit. The profit factor is quite good at 3.53. The drawdown is just around 14%. And remember, this is trading at 5% risk per trade, which is quite high, but we're getting such a good profitability. And if you look at this second line, the short positions percentage 1 is almost 90%. And the long positions is almost 95%. So this strategy, although it doesn't always quite mimic, and I can show you that here, So if you just remember that it's a profitable strategy, and we're picking, and most, 90% of the trades that are taken turn out to be profitable. So that's very welcome. When you look at this, we can certainly say we had a sell trade. So these are our moving average lines, the shifted one and the normal one. We've had an uptrend and we've taken a sell trade. And so we could have said that that's price is rising. And let's look at the same period. What did RSI do? Now, RSI from here to here was kind of flat. So it's not, we would have liked to have seen this decreasing, but at least it's flat and it's certainly still diverging from price. So even though price is going up, RSI is not going up an equivalent amount. And so we do have a divergence between price and RSI. In this case, we took a sell trade and we got stopped out because I have a break even at 40, locking in 5 pips of profit. If we'd stayed in, we would have lost a lot more. So that was quite a good setting for it. We had a nice buy trade here. Price went down. In this case, RSI also went down, but the slope was a lot less than the slope on that. So it is not a perfect automation of divergence trading, but it gets us close to it. And ultimately, the proof is in the pudding, is that we made a nice profit on this particular strategy. And I'd like to show you one more, which is for the pound US dollar. So it's that one there. And I think I've left everything as is. I'm using, yep. So I found with a pound dollar that I did still a 50 pip gap, but only going back 80 bars in the trade. Now to test the pound US, obviously I need to change strategy tester, test for the pound US dollar. Everything else is the same, and so I should now be able to press start, and we should get a nice result for this. So trading is not an exact science, and although we can work on patterns as we have done here, they don't always work out. But once a pattern is strongly established in the marketplace, then of course what happens is that there are many people who follow that strategy, and so it becomes kind of a self-fulfilling activity, and hence we can use technical trading to our advantage. So again, while we're waiting for the backtest to finish, what I've shown you here is a nice example about using a shift in moving averages. You don't always have to have this on 0. You can mimic what happened before by adding a shift 100. If some of you are familiar with the Ichimoku indicator, in fact I think it uses a negative shift. But when you use a negative shift on the Auto Trader, it takes its indication from the previous time rather than current time. So let me not confuse people by going into that, but do consider making use of the shift in some of your strategies. And so we are now 34 trades. The other point to make that this strategy doesn't trade often. It's about 2 or 3 trades per month, so about 1 every 2 weeks. So if you like a lot of action, this one certainly doesn't give it to you, but if you like lots of profit, then at least on our back testing, this looks very, very promising. I should say that back testing this in 2012 and 2013 doesn't yield good profits. And I've noticed now a lot of cases where the market does seem to have changed its dynamics in terms of range or whatever from 2014 onwards. And so I'm now currently testing a lot from 2014 to 2015, realizing that if markets change back again to those early years, I'll have to reset and re-optimize. But at the moment, this is how the markets are operating. And as we can see, if you can on your screen, this is $34,000 profit on a $10,000 account. So we've 350% profit with a 2.3 profit factor and the maximum drawdown of 20%, 21%, which is damn good. Our profit trades, the percentage one has dropped a lot on the pound US dollar. We're down to around about the 50-60%, but the actual profits are really well worth it. And so this is the next strategy that I in fact will be running on my FX for Me program, which, if you're not familiar with it, is a companion program for trading, where we, on a once a month basis, I go into fair bit of detail by video and by PDF on a new strategy once a month. Also, I hardwire the order trader for you as a to use if you haven't got the order trader, and so you can run that EA hardwired for the strategy of the month for about 2 years. And if you have the order trader, you get the set file, so you can run it and re-optimize it as you need. And all of that is only $39 a month, which is really good value since you're getting an EA for that price. So you can sign up for this particular program on a monthly basis. You can finish whenever you want to. Now, let me get back to our PowerPoint. And so what I've covered here now is how we automate a divergence strategy. So I said it's not exactly the same as we might do in manual trading, but it mimics it pretty closely. And more importantly, just even on two currency pairs, we've managed to set the conditions so that the trades are profitable, at least on the back test of running for a year and a half since January 2014. So now I'd like to move to our strategy for this month, and we'll make a start on it and then do the optimization next week. But this is the Forex Power Pro. And Forex Power Pro is something that's available on the web. Some of you may have heard of Russ Horn and the rapid results method. So this is the one that I've downloaded some time ago, and that's the one that we're going to have a look at to see how profitable it is. Now, when you download that file, this is the document that you can get, and he explains it all in great detail. But let me show you that step. So we go back to our charts, and I'm going to go backwards. So I'm going to remove these and then show you how we got there. And let's remove the strategy tester. And so this is the Euro USD 1 hour chart, and Russ uses 4 moving averages and an RSI. I won't put the RSI up again, it's already here. It's an RSI period 10, and we've got 2 levels, a 45 and a 55, and it's a confirmation signal. RSI must be above 55 for a buy and below 45 for a sell. And the argument here is that while RSI is between these lines, the trade doesn't really know which way it's going, and so it's best to stay out of a trade. Now, the MAs I used are 2, and the first one he uses for the entries is a 20 MA with a 0 shift, and Russ uses exponential, and he applies it not to the close, not to the weight, but the first one is to the high, and we'll call that, give that a blue color, and we'll add that. So this line is a 20 exponential moving average of the highs of the candles. And we use that for buys. So when price closes above this line, we enter it, and RSI is above 55, we enter a buy. When that's it, and we set our stop loss at the previous low, which would be here. That's for manual trading. To do a sell, we add a second moving average, still of period 20, still exponential, but we set it to the low, and so we'll give it a red color and click OK. And so for a sell, the signal is when price closes below the red line and RSI is below 45, we enter a sell, and that works quite well. And then the second thing you see adds a trailing stop, and for that to use as a period 10, and this is all sort of very common. You use a shorter period in order to get you out quicker, and I think this one's going to be blue, and I'm going to make that a dotted line. And then we're going to add one more moving average, again 10 exponential. Going to add that to the high, so we'll make that red. And so now, quite simply, the dotted lines are our trailing stops, and if we're in a sell, we enter at this position here where my cursor is, and we close out the trade either when price breaks across the dotted red line, which is up here, or we might wait till price closes above the dotted line, which is here. And that would be quite a nice trade of about 70 to 80 pips. Now, we can set this up in the Auto Trader, but I'd have to have one chart for my buys and one for my sells. And I'd rather not have two charts for trading one strategy. So I was looking at a way to reduce these EAs. I need just one EA. And well, let me first of all add one additional EA, which is going to be an EA of, a moving average of 1. And I'm going to keep that in red for the time being, but I'm going to apply that to the close. Now, a moving average of period 1 is pure and simply price. And so that's the line. You can see how this moving average just follows the close of every candlestick. Now, if we go back to the solid blue line, the 20 to 20 EMAs, they average about 20 pips distance. Add a little bit bigger here, a little bit smaller here, but on average 20. So if I can put a moving average line in between these two, and then I can have a crossover of half of 20 is 10, I can mimic these two lines. So let me add another moving average of 20. And again, we're going to make it exponential, and we're going to add it to the median price, this one here, and I'm going to give that a color of green. And let's make that bold. And so you can see how this line nicely sits in between the two. So we can then get rid of that one and get rid of this one. And we do the same for the trading stops. To replace the two trading stops with one. And to do that, we simply add a 10 period, which is what the trading stop moving averages are. It's still exponential, it's still median price, and I need a different color. And let's also make it still dotted so that we can remind ourselves it's a trailing stop. And then I can get rid of these two. And so we have a green moving average line, which is our line for entering the trade. And now I'm going to make this period 1 moving average. Just make it a bit bigger so we can see it more easily. And so when price breaks above, closes above this middle moving average, this green moving average by at least 10 pips, because that was half of 20 is 10, then we enter a buy trade. So that would have occurred either here or possibly up in here. That would be a loss. Similarly, when we enter this point here, as soon as price closes at least 10 pip below the green line, we enter a sell trade. And then with the same principle here, if the moving average of 1, which is price, crosses back above the trading stop moving average by at least 10 pips, which happens there, then we get out of the trade. And so that now makes it quite easy for us to automate. I've left the RSI here. Russ also suggests using the moving average of RSI as an exit position, but let's not worry about that at this stage. So let's enter these settings into the auto trading. So we go back to strategy tester. We go back to settings and expert advisor. I have done the basics for this. So this is a Forex Power Pro. And as you can see, I don't have a reverse like I had before. And I'm just testing on 2 mini lots and arbitrarily set take profit at 60 and initial stop loss at 60. Because Russ suggests that we should trade at least 1:1. That's a common suggestion. It's preferable to change trade 2:1. And so we could in fact set that to 100 and see how we go. But this is something we'll come back to in our optimization next week. Now, because I have two MA crossovers to deal with, and both of them require a crossover pips distance to be specified, I need to use my triple moving average module for one of them, because that has a crossover pips entry facility. So this one's true. My MA1 period, this price is 1, applied to the close. Don't worry about MA2, worry about MA3. That's 20 exponential EMA, and it's set to the median price. With this module, I have to set a MA2 period, the medium. So because I'm not using it, I'm just setting it very closely to my MA3 period of 20, so 19. Just take it from me that this is immaterial for this particular, and this setting is not going to affect anything that we trade in this strategy. So that's for entering the trade. For exiting the trade, we need to have our filter as an exit. This is the entry, which set to false, but exit we set to true. We don't have a crossover for entry because we're dealing with the exit, and that's a 10 pips crossover that we need. The time frame, I can set this to over a period, but we want to trade on the 1 hour time frame, so that's 60 minutes. The moving average 1 in the crossover is period 1, it's a simple, and the moving average 2 period is a 10 period exponential applied to the median, and that's it. Now, I'm going to come back to this later, but initially with the settings on Forex Power Pro, that's the only settings we have for moving averages. And then we have an RSI setting, which is up here. So RSI entry filter is true. The period is 10, has to be greater than 55, and I've set it to be less than 70. We don't want to get in a buy trade when RSI is too high, nor do we want to get in the sell trade when RSI is already too low. So those are the settings there, and now let's see how that goes on the, now we're doing this on the Euro USD, so we get back to that, and we'll do it over the same time period. And let's hit start. And let's watch the graph. Now we'll find this trades quite a bit, and we'll also find that it's going from top left to bottom right, which is not normally a good direction to go in unless you want to lose a lot of money. But so again, see how we've transferred this particular strategy from the 4 MAs we had before, where we've compromised a little bit and we've taken the median value of each bar, both for our entry and for our exit moving average. And also demonstrating that if you ever want to set price on the Auto Trader, remember that price is just a moving average of period 1. So how are we going? Settings, we're getting close to the end. And that's finished. And if we look at the report, we would have lost here $1,500, a drawdown of 23%, 38% of wins. So not very good the way we've got it set up. Now, I'm not criticizing the strategy here. We haven't quite emulated it the way it was set out. We've got a randomly chosen take profit and stop loss settings. If you're trading it manually, you'd always be guided by your take profits based on where you would place your stop loss. But that's, so I'm not being critical, I'm just saying if we traded it as is over the past 18 months, we would not have, and if we were be able to trade it 24 hours a day, which obviously you can't do manually unless you know how to live without sleeping, this one wouldn't be the way to trade. But what we can do is quite a simple one. So having the Auto Trader, I could say, well, what about if we only trade it in the direction of the longer term trend? In other words, what about if I add another moving average? In this case, I'm going to use my second filter here, set that to true. Same time frame, 60 minutes, but I wanted to only trade longs, only buy when the moving average, when the price is above moving average 200. And I only want to, so when price is above 200 moving average, we only take buys because that's what the MA crosses are signaling. And when price is below the 200 simple moving average, we only do sells. It's a very standard technique used by lots of traders. Means you trade a lot less, but there's more likelihood that the trades that you do take will be profitable. And so let's run it with including that setting. And we'll see how we go now. And it's already starting to look a bit better because previously we were heading south all the while, whereas at the moment we are staying fairly flat, a little bit positive. And when we fast forward it, we should end up with a slight profit. So what we've now done is we've added an extra moving average of 200. I need another color for that, so let's make that now blue. Simple moving average applied to the close. And as you can see, so in this case here, we'd only be taking sells, so we would not have taken this buy, which as you can see would have given us a loss. Price is above here, but also we would not have taken this trade. We would have had to wait until price was above moving average, so we would have got in about here. In any case, let's have a look at the results. We finished up at about $700 profit over 18 months. which is not good, but at least it's profitable. Remember, before we were at least $1,500 in the red. And so just one simple modification of this strategy, only trading in the direction of the longer term trend as defined by the 200 simple moving average, has already yielded us a better result. So I'll do a bit more work on this over the coming week, and next week we'll look at these results in a bit more detail and get these optimized, at least for the Euro USD. So again, to remind you, if you didn't get it before, you can download the Forex Power Pro here. Just Google Forex Power Pro and you'll find your way there. What I did also want to do today in discussions with the people from Donna Forex, we want to make a special offer this week and next week for you to buy the FX Order Trader Elite with a big sweetener, a sweetener worth $79. So if you buy the FX Order Trader Elite within the next 2 weeks, you'll get absolutely free the DIY Trade Manager Plus, which is something that you can use when you're doing manual trading, or you can also use it in conjunction with the Order Trader as a secondary way of adding a bit more versatility to the way you manage your trades once they've been entered. But that only occurs if you buy the Order Trader through the Donna Forex link, which is click2go.me/FX Order Trader Elite. So let me quickly show you those products. The Order Trader Elite, always advise you to go to product specs, and from there you'll be able to download the user manual so that you can see what this product is all about and the capabilities that it has, so that you know what it is that you're buying. And for the in the DIY Trade Manager Plus, also in the product specification, this shows you very simply as to the things that you can do, how you can manage pairs, the break-even settings you can do, the different ways of setting profit targets, including by average true range or with RSI. So you might have a strategy where you want to get out when the price spikes up and RSI, say 7, jumps to 90. You can set your take profit there and grab the profit while it spikes. Different ways of setting loss targets. You can do partial closes. You can do about 5 different ways of trading stops with ATR, with parabolic SAR, with fractals. So it gives you quite a lot of options, and you can also scale into your trades with this trade manager. So it's a very versatile instrument, and it comes to you absolutely free when you purchase the FX Order Trader through the Donna Forex links, which is click2go.me/FX Order Trader Elite. And I think that's where I will leave it. So remember, you can also follow me on Facebook to look at some guidance and tips and ideas on a daily basis. They're just short posts, and I think I might have said that I've been trading the Aussie dollar the last month and posting my thoughts as I went trading, and that last month has yielded me 30% profit. So it's been a very profitable past month. However, that's all for today. So just to recap, what we did today was we did our bearish bullish divergence. We showed you how to automate that with the Order Trader and to get profitable strategies. We then simulated the Forex Power Pro, and next week we will continue with that and in terms of optimization. I've also mentioned that with this divergence trade, the trend reversal, that if you join FX for me, then that strategy will be one that you'll have for the month of August, either as a hard-coded EA, or if you already own the Order Trader, as a set file that you can monitor and modify further as you see fit. So I hope this has been of benefit to you. If you weren't able to join in, that you've now seen it. I'll run the webinar again at the same time next week, which is 8 p.m. Saturday, Australian Eastern Standard Time, which is somewhere around, I think, 11 o'clock in London on summertime. I thought it was 10 a.m., but I'm not too clear on that. But whatever time it is 8 o'clock at night on Saturday night in Sydney. So I won't be at the movies, but I'll be making another video. So until then, this is Andrew Peters signing off. Good trading and all the best. Bye-bye.